Welcome to Bunnex Investment Group. Most of the strategies we make derives their concepts from the market maker method, and it is the same method that we teach in our advanced course. So in this video, we'll talk about a very simple London session trading which can actually revamp your results. But before we go through, make sure you subscribe to this channel and check the notification bell icon if you haven't done so. So we are going to explain this in three parts as we always do. We are first going to talk about when to look for the London session trade. What time does this session start and what time do you need to be up if you are in the western side of Africa? So the second part will be the strategy, the actual trading strategy, where we'll talk about the Asian highs and lows bases. Then last but not least, which is the most important one, market examples, and you need to stick up to the end so that you fully comprehend the war strategy. So when do you actually look for the London session trade? So basically, the London session is the first tradable session in the trading cycle. We all know that there is the US, there is the Asian, and there is the London. So the London actually acts as a median session between the Asian and the US session. I understand there are a lot of sessions in trading context, which involves or includes I've seen almost 4 or 5 sessions, but the main ones are the Asian, London, and US. So it's unfortunate that for Westerners and referring to Americans, it comes very early in their day, but it's worth it to spare a few hours in looking for entries in this particular session. There are actually long strides that are made in the Asian session, since it's actually used by the market makers to make the sustained long runs of the cycle. So the Asian session comes at 7:30 GMT, and you can convert this time into your time zone using the time converter on Google. You can actually change it to your time zone and know when this session starts. So as I always say, it's better to actually start looking for entries after the London session starts. So this is the time to look for possible entries in the market, and if it's Eastern Standard Time, it will be very early, and you actually need to wake up and probably set alarms for alerts, trade alerts, or even set pending orders within that period. So this strategy, which is actually derived from the market maker method, and as I said earlier, the first thing is to understand how the levels work, and we teach that in our course. So the course is actually something that is cheap and worth it to invest in, going for $99, and it's actually a straight to the point course. No need to stay in front of the screen watching long hours of videos. So these levels will actually help you to determine peak formation lows or peak formation highs. By peak formation, we are saying at level 3, we expect the market to reverse. So this will be a peak formation high, and this will be a peak formation low. So we need these points not to trade them, but to determine and identify them by counting of levels. And after seeing this, the next thing is to see a level 1 flow away from the peak formation high. So after setting the peak formation, we need to see a level 1 flow that is now an evidence that in this case sellers are now in control of the market, and the market makers have actually induced low short contracts within that particular trading asset. So after seeing that, on the day of level 2 flow, expect to see retest of the Asian session high or low as shown in the following slide. So after seeing the peak formation high like this one, this will be actually determined by this previous cycle where we had a completed cycle of 3 levels to the upside. After that, we need to see level 1 flow. After seeing level 1 flow, we need to see the Asian session range or get the high of the Asian session, and that is the basis of our entry point. So at this point, it needs to actually coincide with the London session timing, right? You need to actually look for this in the London session timing, and at the high of the Asian session, that is where you would look for candlestick reversal patterns. I'm sure there are a lot of candlestick reversal patterns out there. That is what you look for at this point. And after looking for that, this is your possible holding period up to level 3, depending on the cycle of the higher time frame. You need to actually be aware to get out of the market before they reset or they reverse. So you need to actually be knowing your levels count. So let's go over the markets to see the full strategy. All right, so this is GBP USD. Pound pairs are actually one of the best pairs, group of pairs that actually responds very well in the London session. Why? Because pound is actually a currency that is coming from Great Britain, and with that, we actually have more liquidity within that particular pair. So as I've said on the slides, the first thing is actually to get a peak, right? So I'm going to illustrate, or I'm going to just mark peaks. In this case, this was a peak, right? We had one first day of drop, second, and then third, we reached this peak, and it was an H4M that was in formation. That is why we didn't have a full cycle in the upside, but a spiked one that actually erased all the levels count. So from there, we actually had a peak. So as I've said, we need to see peaks. Peaks are obtained by levels counting, and levels counting requires some techniques to actually count them properly. After that, we can see that we had the first level 1 flow away from this peak. After the first level 1 flow, in this case, my Asian session is actually marked in blue rectangles. These are the Asian session. So in this case, that is when we were now expecting our level 2 flow. So in this case, we can see this is the high of the Asian session that is actually printed by this particular template. So we had this Asia session high, and from that Asia session high during the London session, we had retest of that Asia session and rejection candlesticks, which are actually there. So someone may say we need confirmation candlestick retest. This is H1, mind you. After candlestick retest, rejection, and confirmation candle, your entry was going to be here, and your stop loss above the high, and your take profit should always be double your risk. So you were going to enter here, put your stop loss above, and your take profit double your entry, and this was a good trade. So in this case, we had another point. We had the first. This was the first. Actually, the peak. After the peak, we had the first level. After the first level, on the second day, we actually had this particular retest, right? It was this, the high of this Asian range was this one. The market came back, retested and rejected, and confirmation candlestick, which was a red one at this point, stop loss above, structure, and take profit at by 2 what you have risked. Then we can see that we now had, it was level 1, level 2, level 3. After that, we had a reset, right? This was a peak reset, level 1 from the peak reset. After level 1, this was Asian session high, we retested it, and after that, after confirmation, we can see that our entry was going to be here, our stop loss above high of day, then our take profit at by 2, like that. So basically, that is what we were actually trying to look for. And right now we are waiting for a reset on Euro US on GBP USD, and from that reset we apply the same concept. In this case, in the downward side, I'm not so sure yet because this has not yet confirmed as a reset, but there is also a higher probability that we are now resetting to continue with the downward cycle, since we do not have enough levels to complete this particular cycle. We still have first three sets of three, second set of threes, and we are anticipating the last set of threes like that. So on that note, we come to the end of this video. Don't forget to like and subscribe, and check out our free Telegram channel, which I'll leave in the description box below.